Hi, I'm Catherine McQueen and welcome to Pink Diamond, the show that digs deep into the pink sheet markets to find diamonds in the rough. Today's stock returned 16% in 2019 and a further 2% already this year. And with the US economy continuing to shrug off flashpoints and recession fears, firms that supply growth businesses seem well positioned. That's just what TPG Speciality Lending does. They are a business development company that provide senior secured loans, mezzanine debt, non-control structured equity, and common equity to growth businesses. It has a market cap of $1.46 billion and annual net income of $143 million. The firm focuses on co-investments for organic growth, acquisitions, market or product expansion, restructuring initiatives, recapitalizations, and refinancing. In short, if you want to grow your business, then TPG might be able to help. Their fund invests in US-based companies with an enterprise value of between $50 million to $1 billion or more, as well as an EBITDA of between $10 and $250 million. Their typical transaction size is between $15 million and $350 million. Let's take a look at the fundamentals. TPG has a return on assets of 6.69%, which is amongst the best returns in a sector that averages 1.7%. Their profit margin is fantastic too at 53.38%, and the firm has a return on equity of 12.51%, close to double the sector average. Looking at the current valuation, the price to earnings ratio is 10.50, which indicates the firm is priced fairly. Looking ahead, the forward price to earnings ratio is 11.31, which suggests that the firm is undervalued and has more upside potential. The enterprise value to EBITDA ratio of 17.86 also suggests that the firm is valued quite cheaply. Revenue-wise, TPG has shown strong growth of 10% over the last year. Over the past 5 years, this has averaged 9.72% per year. Its earnings per share also grew by close to 4% in 2019. When we look back over the past 5 years, we see an average growth in EPS of 0.39%. TPG's Piotrowski F-score is 6, a neutral score which suggests average health and profitability. The firm's debt-to-equity ratio is in line with industry averages. Technically, both the long and short-term trends are positive, which is very encouraging for investors. The firm is trading near its 52-week high, similar to the S&P 500, which put its performance in line with the market. The 50-day moving average is currently tracking price action higher and providing support on dips. And in terms of targets ahead, we have November 2019's high of $22.23 within touching distance. It's likely that whatever happens, the stock will retest that high. That represents a 5-year high. The only level above that is June 2014's all-time high of $24.41. The lack of any price action in between, coupled with continued strong data in its next earnings report, could see a quick move to retest that high. That's all we have time for today. As always, make sure you do your due diligence before making any investment decisions.